So what is it that the ultra wealthy do that nobody else does, especially when you hear all the stuff that's in the media today? What do the ultra wealthy know that we don't? That's what we're going to talk about today with Dave Wolcott. Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. This show is for you if you want to become work optional, where you have enough passive income to work because you want to, not because you have to. And if you're not just trying to get rich, but more importantly, you're trying to live a rich life. Because as you grow your wealth and your prosperity, you now have a greater ability to create a ripple effect from the lives of those around you. That is what we're here to do today. I appreciate you allowing me to create that ripple effect through you and so many people that you've referred to this podcast. Thank you so much. Again, we're so grateful because now we're going on more than 11 years strong, and that's all because of you. Hey, as a reminder, guys, guess what? Like, our book is out. The Work Optional Blueprint is out. Figure out how to get your copy today by visiting us at moneyripples.com. All right, guys, so I'm bringing on a special guest today, Dave Walcott. Now, the one thing I love about Dave here is that he's kind of like my counterpart, right? He's been teaching this stuff, and especially because he's been really understanding what is it the ultra wealthy do? What is it that you're seeing in family offices and what's happening there? What do they do that's differently than what we've always been taught? And it's a very different mindset. He actually started out, by the way, in the Marines as a captain. He's got triplets. The guy is a family man as well. He's also not just an author, but a podcast host. I was actually just on his show, the Wealth Secrets, the Wealth Strategy Secrets of the Ultra Wealthy podcast I was on recently. And also, you want to check out his book. We'll talk about today, the holistic wealth strategy that you will want to check out. So, Dave, welcome to our show.
Hey, Chris, really grateful to connect with you and your audience.
Yeah, same here. So you gotta help fill us in the details here. How'd you go from a Marine captain all of a sudden to, become this guy that's talking about money?
Yeah, it's quite a path, really. And probably like many in the audience, I was told that the recipe for success was go to school, get good grades, you get a job, and life would just kind of work out, right?
Yeah.
So being raised in a middle class family, I kind of followed down that path. Did have the opportunity to go to college and then do the ROTC program in the Marine Corps. In the Marines, I learned some amazing things, including being combat tested, traveling the world, but really learning some things such as leadership, integrity, and teamwork, things that they don't really teach you in other places in the world. And then shortly after the Marines, after 4 years, I transitioned into the corporate world. And I can tell you, Chris, I was quickly frustrated with losing that sense of purpose and that sense of mission that really drove me in the Marine Corps. And at the same time, my wife and I were starting to raise a family. We had an 18-month-old toddler running around telling us what to do. And on October 24th, 2000, we literally had triplets and quadrupled the size of our family. And I can tell you that, as a father, going from, one child to all of a sudden 4 and holding 3 babies in my arms was like absolutely life altering. And the first thing that was really going through my head was, I have got to provide for financial security for my family. And it's $1 million to raise a kid. Maybe I would retire someday and I wanted to live a big life. So I went to see my financial planner, and as you well know, he told me the same thing everyone else told me, which was, hey, no problem. Just max out your 401k. They have programs called 529 plans, for your kids. You're going to get some extra tax savings. And it was right then, Chris, I knew that building wealth as a retail investor, was not going to happen, right? So this launched
What
me
was it
on this.
that kind of made you question it? Because most people just take that and say, "Oh, I've heard that before too. It must be right." What made you question it?
Well, compounding 7% over the next, 20, 30 years got me nowhere. Like
Yeah.
I couldn't get my goal. I mean, that was simple math,
Mhm.
right? And so I knew it wasn't the answer. So this launched me on this obsessive journey to then start figuring out how are the top 1%, the top 0.01% really building wealth. And
Yeah.
so I started investing in private assets at that point, and this is back in 2000. So I got into everything from single family to multifamily to office to retail to raw land to oil and gas. I was even investing in alternatives back in 2000.
Wow.
And, fast forward 20 years, I grew quite a nice portfolio and did really well and had a ton of learning lessons. And so I really created Pantheon and my book, The Holistic Wealth Strategy, as really a blueprint and a framework to help other people think about, okay, how do we think about this game totally different than we're learning from Wall Street? And how can we really live the life that we deserve?
I love it. That's a huge mission I know that we align on for sure. So tell me, like, what have you learned specifically that the wealthy are doing differently, or even think differently when they think about their investments?
Yeah, so one thing that's really interesting is I think that I'll bring up two really key distinct points,
Mhm.
okay? The first one being that I should outsource my entire financial picture and wealth to a financial planner, and he knows best, their team knows best. I'm just going to outsource it, right?
Yeah.
Now, I might do that for my lawn care or something like that, but we're working so hard for our money. Why just completely outsource it if you don't really, understand it?
Hmm.
And you will learn that there's groups like Tiger 21, for instance, who have 1,300 members and the average net worth is 100 million. And they have roughly 22, 23% exposure to public markets. That's it. Okay. But
Interesting.
Wall Street is actually telling you that you should have 100%
Yep.
of your assets, all correlated to the markets. Even Tony Robbins is talking about this, now that he's gotten into the financial world, is
Hmm.
that by investing directly in the private markets, what you're going to get, Chris, is I love to call this a trifecta, which is when you can invest in something like, let's call it an apartment syndication or self storage or one of these other asset classes, but you're investing privately, you get a trifecta, which means you're getting tax efficiency on that investment directly as an LP or GP. You're also getting passive income today, not waiting till 65.
Hmm.
And then you're also driving forced appreciation into the asset, which means you're growing value into the asset. Now, if I was to compare that to equities, if you have 100K in Tesla stock, what is your strategy? Your strategy is only hoping that it's going to go up with the market over time. And maybe it
Hang on
will,
for the
right?
ride.
Yeah. Hang on for the ride, and maybe you make 7, 8% return
Mhm.
before taxes, fees, and inflation. So that's
Right.
number one, Chris. And then let me point out the second one that I think, which is really interesting, not many people are really aware of, but Wall Street really promotes what's called accumulation theory, right? And I
Yes.
know Garrett and some others will talk about that in his book, right? But it's essentially building this nest egg for retirement, then doing a Monte Carlo simulation, which means you're going to live on 4% or less a year until your money runs out. And let's hope it doesn't run out when you're 85 or something.
Hmm.
When you can invest in this way in private assets, you're actually having enough passive income that is coming to you tax efficiently, and your actual equity value continues to grow. So, this is how you actually create legacy wealth.
I love it. That's one thing I think is fascinating because you're right that we've been taught as middle class, rich dad poor dad. He would refer to as the poor class, right, which could include people in the lower end of the upper class, But even talking about how we're often so taught that everything's about Wall Street, not about Main Street investing, but it's all about Wall Street investing. And it's interesting when you say that, like you said, Tiger 21, roughly a little over 20% of their money is actually in Wall Street, where the rest of it's in private assets. And why?
Absolutely.
And so, why do you think there's such a big discrepancy there?
Well, if you understand how the business model of Wall Street and the
Uh-huh.
financial services industry works, it's very clear. They get paid on assets under management. So when you want to talk to them about and I'm talking, for the most part, right? There are some independent RIAs or boutique shops that may offer, some privates, but not that many, right? So,
Hmm.
I'd probably say 95% of them, are under one of the big shingles, and they get paid and compensated on assets under management. So if you want to talk to them about your single family rental, they cannot advise you on that, right? They have no
Right.
idea how that fits in, nor do they understand tax strategies, right? Expansive tax strategies on, let's say, investing in oil and gas where you can offset your active income and reduce that, right? Which could be bigger than the return you're making completely in a full equities type portfolio, right?
Hmm.
So they're not really incentivized, nor do they have the expertise to understand, I would say, these alternative strategies, or just different vehicles. But when you start to again look at the ultra wealthy, asset allocations, even like the Yale endowment model, other models out there, you'll see much more of a preponderance in privates, and it's for those reasons we pointed out.
Now, I know one thing you often talk about, and it's fascinating because this is a big difference between Wall Street and investing more in Main Street. You've talked about tax benefits, right? And isn't it fascinating that Wall Street offers no tax benefits, right? I mean, the Roth IRA umbrella from the IRS might help with that, but there's not really a tax advantage. But what you've talked about with a lot of other investments, describe to us some of the tax advantages you get from investing outside of Wall Street. If you've been following this podcast, you're probably looking for great ways to create passive income right now, right? Well, we got you covered here with Central Lending. Central Lending specializes in alternative investments that actually are designed to create steady returns and long-term financial security for you and your family. Now, they prioritize transparency. They love, building those strong relationships, giving you that confidence and peace of mind, knowing that you have your money working harder for you, so you don't have to work so hard for that money. You want to learn more how to do that? Go to centrallending.com and check out what they've got today to create your passive income and wealth creation right now.
Yeah, so this is a huge one, right? And this we talk about in phase 3 of the book, Chris, which is all about actually building an infrastructure around your wealth. And
Yeah.
that includes things like setting up infinite banking, which I know you're a big proponent of, right?
Hmm.
Such a great vehicle to do that. But let's talk about taxes, right? If you're in traditional markets, they're projecting your maybe 7, maybe even an 8% return over the life of what, 30, 40 years of growth. Okay. And again, that's before taxes, fees, and inflation. And if you're in government sponsored qualified plans, you're pulling out that capital that's taxed at ordinary dividend tax rates, right?
Yeah.
At the end of the cycle. And that's the only thing I'm certain that's likely going to go up that I can predict in the future. But the wealthy really understand that when you invest and make this paradigm shift by partnering with the government, right? Rather than seeing tax as a penalty, you understand that the tax code is actually a roadmap or a series of incentives for business owners and investors. And so when you can partner with the government by investing in things like energy or real estate, then you get back great tax incentives, right? And
Yeah.
you can, it is very, if someone had told me this would have been created so much clarity in my life. But I had to go through firing 5 different CPA firms over the years, spending many big 6-figure checks on taxes and never knowing where I stood in terms of taxes. But I know all of your listeners are educated. So if you think of Kiyosaki's cash flow quadrant, we actually just had Sharon Lechter on the
Hmm.
show, which was awesome to talk about, her expertise as that came through as the co-author. But think of cash flow quadrant, right? And part of the beauty is that if you're on the right hand side of the quadrant as a business owner or an investor, as a business owner, I would say roughly that 20%, you can be paying 20% in taxes or less. If you're
Yeah.
a full-time investor, you can be at 0%, right? And
Hmm.
that's Tom Wheelwright validated, right?
Yeah.
So if someone had told me that, I mean, just think we have so many high income investors, doctors, high income professionals from California. They're paying 50% in taxes, Chris.
Hmm.
I mean, it's ludicrous, right?
Yeah.
So when you can talk about reducing someone's taxes by 10, 20, 30%, and then change that return profile from a 8% return to a 15, 20, 25% return, plus the taxes on top of that, that is going to exponentially compound your money.
And that's a big deal. I think, I can't remember which book it was. I remember Robert Kiyosaki saying in one of his books that if you're not earning at least, I think it was like a 14% rate of return, you're basically not going to move the needle much, right? You're pretty much
Yeah.
going to live on whatever you're saving, and that's
Yeah.
it. And that's a great point. Like that tax benefit. I know there's a lot of people listening right now that that's a big deal for them. And I don't think, I think that's something that needs to be stressed more often.
Yeah, think about taxes as another area to actually increase your returns. Well,
Yeah.
everyone's just focused on yield from a particular asset, but you should be focusing on your taxes. And in fact, that's why I have an amazing, CPA team, and I work regularly also educating myself. We also run a
Yeah.
mastermind community. We have multiple CPAs come in and talk. So I'm always learning about new strategies. And every time I buy something, I sell something, I'm constantly thinking about taxes and how to build that into my life. And that's how you can get down to, close to zero, if not less than that, actually.
Yeah. And how do you see infinite banking playing into that from a tax standpoint, or even just from a general investing standpoint?
Yeah, so once you get your head around how IBC works, it's a complete no-brainer, right? You put capital in, you have a capital warehouse that's, it's not technically tax-free, right? But it's compounding like it's tax-free. You're not going to pay taxes on it unless you exit it, right?
Mm-hmm.
So it is effectively compounding tax free. So if, let's say, you're in a whole life policy that you're at 6%, and that's more like a 9% really return, right? If you
Right.
factor that in. And then, this is just this is the stepping stone in the process, right, of investing. You put capital into the IBC policy, you take it out to leverage it, and then you put it into one of these other assets, right?
Mm-hmm.
Into these private assets to then multiply. And now you're taking the same dollar and kind of using it twice. In addition to that, there's just so many benefits. The one thing I think people don't understand about IBC is they look at it as, well, it's just an insurance. It's cost, right? It's cost to me, and I could get a better return elsewhere. Well, I could tell you, as you talk about, there's like, a dozen different benefits of what it actually does. So let's, just a few of them, for instance, right? If you take, you can pass it to your heirs, right? And avoid taxes and probate. That's a
Mm-hmm.
form of legacy planning and estate planning. What is that worth to you? What is the death benefit worth to you? What is the ability to have capital working for you and borrow against it to leverage and do something else with, or to use it for an emergency? What is the value of that for you?
Yeah.
What is the value of it when, let's say, you want to start drawing a stream of income from it that's tax free,
Right.
right? In the future. And so when I start to add all those different things up, it's extremely valuable. So it's not really a case of if this, that, but it's IBC and investing in privates, right?
Right.
And that's how you can, we want to look for multipliers in our wealth. And this is one of the things, Chris, the ultra wealthy do so well, right?
Mm-hmm.
Don't just go for like linear type returns. Like, again, when you're investing in equities, all you're doing is hoping you're going to go up in value. When
Yeah.
you do something strategic like IBC, it's a complete multiplier. Or you invest in a private asset, it's a multiplier. And then we do something called strategy stacking, which is where you start to combine these strategies all together, and you
Mm-hmm.
see, hey, now I'm doing IBC. And then I just, like, we have someone, as an example, right? We have someone in our mastermind community who just, he made a good amount of capital this year, a very big amount. He's repositioning capital. He has a very large, tax bill coming up, but he set up his IBC policy, this year. Now he's borrowing against that, and he's going to go invest in oil and gas and get up to a 92% offset on his
Right.
active income, in the same year to completely reduce the taxes, right? And
Yep.
that's going to create a stream of income for him. It reduced his taxes, and he created an asset by setting up the IBC policy.
Right. He essentially has two assets that are giving him tax advantages right at once.
Exactly.
Yeah. That's fascinating. I love that. Well, on that note, Dave, last two questions for you. One, what's the best way for someone to follow you, get your book, follow your podcast? What do you recommend?
Sure. I wanted to give your audience a free copy of the book. If you thought any of this concepts was interesting and could add value, if you just go to holisticwealthstrategy.com, get a free copy of the book and can find us from there.
Awesome. Yeah, we'll have that in the show notes for everybody so you guys can get your free copy. That's very generous of you, Dave. Really appreciate that.
You bet, Chris.
So, and then final question. This is the Money Ripples podcast, right? We talk about that ripple effect in creating people's lives. So, Dave, what do you feel is your ripple effect you're here to create on this planet?
I really want to change the way people think about money, Chris.
Mhm.
I think too often people are thinking about money to become rich, which I think is very different from becoming wealthy.
Yeah,
And in becoming wealthy, there's actually multiple dimensions to wealth. So it's not only financial capital, it involves spiritual capital, emotional capital, intellectual capital, physical capital, right? So when we
right.
can embody all these different forms of capital, we can truly become wealthy and we can live our best lives, right? And create the best lives for our communities, our kids, our families, rather than being kind of trapped by chasing the dollar.
I love that. That's to me, that is true wealth. So I love that definition. Well, Dave, again, I appreciate your generosity and sharing with us today. It's great meeting a brother from another mother.
You bet, Chris. Yeah. No, it's all about trying to just, help and I think the more people really get great education from, folks like yourself and everything and understand there's different options than Wall Street and it's not all one or the other, but just understand more and then you can start to explore some of these strategies, see how they work for you, and then you really start to make some real progress.
Amen to that.
Yeah.
Again, appreciate your time today. And everybody be sure to go check out that free book. Again, we have the link in the show notes for you guys to be able to click on. So just remember, guys, like we want you to get the book naturally. But I know Dave would agree with me on this. It's not just about reading the book, it's about what you do with that information. That is what makes all the difference in your life. That is where wealth is created. So make sure you go and make it a wonderful and prosperous week. We'll see you later.